Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending October 25th, 2024. Appreciate you all tuning in to this show and liking and subscribing to this video. And this week I'm going to title the video Equities Sell Off as Election Looms Large. And this is always a good heat map I like to take a look at, the Russell 3000 1 week performance. Let's reload that real quick. And what you see is a lot of red. Apple down 2%. Only a few of the mega caps really bucked the trend. Tesla on earnings was up big, even though their quality of their earnings was very, very poor when it comes to the accounting side. Nvidia was up 2%. Google and Microsoft up a little bit. But everything else pretty much in red territory. And it tells you really what happened in markets this week. It was pretty much straight down if you look at the broader index like the NYSE, which I'll get to in a little bit. But the market was overbought and probably needs some digestion, shall we say. So not a shock to see this, especially as you head into the election season and you start to get volatility pick up a little bit. I'll show you the VIX here real quick. And obviously this has been this looks bullish, right? You have that big move up in the month of August when you had the yen carry trade unwind, but you never got back to these low levels in the 11, 12 range, 13 range for the VIX. It never got as low as it got was that around 15, and continued to make a series of higher highs and higher lows. So that is in an uptrend as we head into the election, and something that everybody should be taking note of. Now, let me get to the economic data real quick, or the Richmond Fed Manufacturing Survey that did tick up a little bit, still in negative territory, but as you can see, the best level in 4 months. New single family homes that did tick up as well, even though mortgage rates were up a little bit in October. That didn't really start to move until October. And this is the September number. So you'll probably see this come back down next month, but still, the September month was good for new home sales. On the jobs front, you saw the initial claims for unemployment tick down, but the continuing claims for unemployment ticked up to the highest level in a year. And you can go all the way back to a 3-year chart and say, okay, it's almost the highest level in 3 years. And we haven't been this high since November of 2021, as you're still kind of getting back from the pandemic. So the jobs market is normalizing. It's weaker than it has been, but it's hard to see with this big jump here. But basically, it's not a bad market. It's not a good jobs market. It's a more balanced market. Let's just say that. Kansas City Fed Manufacturing Production Index, that was flat, but well improved from the month before. Consumer sentiment ticked up a little bit in the month of October. So this is more of a nowcast of what the consumer is thinking. U.S. durable goods minus defense down once again by about 1%. And I want to show you this because this is so important. It's M2 growth year over year. And this is a big reason why we had inflation. What you can see is, pre-pandemic, you had money supply growth between, let's call it 3% and 7%. It's kind of where it typically will hang out at. Okay, you go back to the 80s, it was more around 9, 10%. Obviously, the 70s, you saw it tick up into the teens. That was the one of the reasons you had inflation. And what you're seeing here is that it is now back in positive territory, still relatively low compared to history, but it's not in negative territory like it had been for a lot of last year. And you can see that the M2 growth really inflected in the first quarter, early second quarter of last year. And so that's why liquidity has been improving since then. You can see that here with that kind of aligns with, let me go to the 5-year chart. It kind of aligns with the growth in bank credit, right? Banks continue to lend now at 3.8% year over year. And this is a big factor in liquidity becoming a lot looser and you having asset prices float higher. So as long as those things continue to inflect higher, then I think you are in a good position from a liquidity standpoint, and that means any pullback in markets should be bought as opposed to sold. Okay. Now, if you look at the Fed meetings for the next coming couple of months. Next month, you have a 95% chance there'll be one cut, and then about a 75% chance there'll be another cut after that. And so we're going to get one, probably two cuts by the end of the year. You go all the way out to December. That is now coalescing around 3.5%. Okay, so not a strong easing cycle, but something that where you'll get cuts throughout 2025. So that's the economic data, but let's dig into the charts. We love to take a look at those. And what I'll start off with is the NYSE, and that is, let's look at the daily chart here, just down every day this week. That is interesting, right? And if you go over to the small caps, that was pretty much weak all week as well. The Nasdaq that did briefly make a new high, but it made a high with a topping tail here. So it did not close at a new high, but it did intraday make a new high. And if I zoom in on Friday's market, what you can see is that this faded throughout the day and closed near the lows. So that was certainly bearish, at least in the near term, and something to watch as we go into next week. You have a doji candle here, which is indecision. When you get doji candles at a high, that is a lot of indecision. Okay, and then if you look at bonds, bonds sold off as well. Look at this. You see the IEF, the 10-year Treasury. So long duration bonds certainly took it on the chin, and obviously that's reflecting higher inflation expectations. And does that also mean a Fed easing policy that is going to be cut short? I think that's a possibility as well. The dollar has been moving higher, and we know that tightens liquidity conditions. Okay, so just be aware of that. A stronger dollar will tighten liquidity conditions. The yen, we had that yen carry trade blow up. It's it's definitely pulling back, but it's not making new lows, right? So that's of note here is that if this makes a significant higher low, this could start an uptrend in the yen, and then you could see another bout of the carry trade unwind at some point in the future. So something to keep an eye on, and what I will continue to be watching. Let's take a look at the move index. This is another thing I'm watching as well, and this will also something that the Fed is going to have to battle with, which is Treasury market dysfunction. We know we have a deficit problem, massive amounts of debt being issued, and this is now in an uptrend. And it was coinciding with the odds of a Trump presidency increasing. And so is this the move index saying, hey, a Trump presidency would be wildly inflationary, and they'd issue a lot of debt, and that would make the Treasury market not function well? I think that's certainly a possibility here. Okay, and so I just wanted to highlight that because something I'm watching. If this gets up closer to 150, there could be bigger problems. The pullback, I think, could be worse. Let's just say that than just a mild 5% pullback or something like that. So just be aware. Sorry, wrong ratio I'm looking at here. Here is junk bonds. Actually, let me do this one. SHYG. SHY. This is my favorite one. So this is short-term junk to short-term treasuries. Overall, this is fine, right? A little bit of weakness this week, but nothing too much to worry about on that front. Gold prices did pull back. Actually, not really, right? You just kind of chopped sideways. The miners did have a little bit of weakness here as we close the week. But overall, if gold prices continue to go up, guess what miners are going to do? They're going to make more money, more money. And so gold is doing well. Silver kind of consolidating this week. So no real issue on that front. Let's see, what else do I want to get to? Let's get to some of the sectors. So industrials did pull back, so that showed a bit of a weakness there. You had utilities that also pull back, especially as we close the week, mainly on that higher interest rates, right? Remember, these are bond proxies. So if you look at like an XLP, this is also bond proxy. This has also been heading lower. You look at the IYR, which would be real estate, also some relative weakness as of late. So something to look out for as rates kind of rise. I think we'll at least be in a trading range. And I do think the lows in rates in the kind of medium term are in. And so I think rates are headed higher, mainly due to expectations of higher inflation as we get into 2025 and beyond. So something I'm definitely paying attention to. And if you are over levered to bonds or bond proxies, long duration assets, then that will ultimately be an issue. I think at some point as we go through the end of the year. The Qs, this is the Nasdaq. Like I said, the Qs didn't make new highs. The Nasdaq did, but the Qs did not make new highs. So Nasdaq a little broader. The Qs only 100 stocks, and what you can see here is this is showing what we call a MACD divergence. Let me zoom out on a weekly, and this is pretty clear here. You have the MACD now in a downtrend here. Even though we're threatening new highs, this is up into resistance, MACD divergence. This is kind of telling me, and you get a lot, you got heavier than average volume last week. This is telling me you could have a pullback. So I'm getting mildly bearish on the market in the short term as we head into the election. And is the market off sides with pricing in a Trump presidency? Is that is everyone's thinking that's bullish, and maybe it's actually more bearish. I think it's still TBD. He says a lot. He said a lot in his first term, before his first term, and what came to fruition was very different than a lot of his rhetoric, and I think that'll be the same. And some of it is because like all politicians, they say things on the trail and they don't get to those. You can say that about every president at some point. But then there's also the fact that president's not king, and they have to go through Congress for a lot of things. And so how Congress settles out is going to be in many ways more important than who wins the presidency. And so it's going to be a very interesting election on many, many fronts, and ultimately the market reaction. So, I wouldn't get too bearish, but I am a little bearish. I don't like this MACD divergence. I don't like how we close the week on markets. Like I said, look at small caps, right? Close at the low, pretty much the lows of the week. And this looks a little choppier and still kind of range bound overall. If you look at the S&P, that is near new highs, but you did have, let's zoom in here, and you can see this, we closed below last week's low. We did not. Okay, so that's a bit of a saving grace here. We did not close below last week's low. That would be a reversal candle if we did, but we did not, it looks like. Let's zoom in a bit more. Yeah, that's clearly above the bottom from last week. So, kind of a choppy period is probably more likely with positive liquidity, and into year end. There are some structural things that make a year end positive when we're already up for the year. This has to do with gamma positioning and option positioning, etc. And so, just to be just want you to be aware of that, so you don't get too bearish, even though I do expect some volatility in the short term. All right, so that's where we're at. Appreciate you all tuning in and liking and subscribing to this channel, as well as our podcast, InvestTalk. And I hope you have a wonderful weekend. And a reminder, the contents of this video are for educational purposes only and should not be considered as a recommendation to buy or sell security or to participate in investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a wonderful weekend.